exploration insights. Thank you so much for joining us today.
Great, thanks for having us.
Thank you.
All right, so we're here at the second day of BDAC. How are you finding the conference so far?
I've been impressed or surprised at how crowded it is downstairs right now. We got here at 9 o'clock and it was tough to get in here, so it's a good crowd. I think it's a reasonably positive environment right now. We're starting to see some real deals come by, and just this morning, Joe and I had 2 out of 4 meetings. Pretty damn interesting. We're going to follow up in detail.
Yeah. No, it's been pretty good because you got a little bit of the multi-commodity. It's not one specific company, or it's a lot of people getting traffic.
That's great. And Brent, last time we spoke, we talked about how majors are investing more in junior companies. Can you talk a little bit about what majors are looking for when making these deals and what juniors are seeking from them?
Yeah, it's interesting. I mean, it's really started to happen just the first part of this year as well. With we just saw Newcrest put $19 million into a company that's spinning out of Almadex. We saw them putting money into Lending Gold. We saw them putting a joint venture together again with Mirasol. This is happening, across the board. Barrick's getting involved. So it's positive. And what they're looking for is big land packages with big, tight targets run by competent geologists who know what they're doing, so that they're basically letting the juniors do their initial exploration work, and they're confident in those people. So that's what they're looking for, and it's happening. It's great.
All right. And on the junior side, what are juniors seeking from these deals?
What they should be seeking is, I'll let Joe talk about this yesterday in this talk. I'll let you go for that.
Well, the junior side is the other side of the coin. Is basically they would like the endorsement of a major, so that'll give their investors and potential investors the idea that, hey, some company that's actually producing this commodity actually likes your deposit and is willing to actually give you some money or do a joint venture or an earning. And they're also potentially validating what you do. And if you continue operating, they're validating you in terms of the technical person. And also, companies don't really make money off the equity placement, and so juniors can ask for a premium, and majors don't make money off of the warrants either, so they'll issue no warrants. And what they're interested in is finding a multi-billion-dollar asset that they could put in their portfolio. A couple of million here and there does not move their needle, so they don't really care about that. So a company that can operate, move it forward, get the endorsement, some cash in the bank, that's basically what juniors are looking for right now.
Right, and you also talked yesterday about the different approaches that majors have. They have like a passive approach and an active approach. Can you give an example of each?
Well, I mean, I would say that, what we've seen is Goldcorps, the Agnicos, and the Kinrosses have been doing a lot of 9.9% placements in a lot of companies. And for me, those are sort of passive in placements where you might give a little bit of technical support, but there's no earning into the project. It's more like a flyby. It's tentatively an endorsement, but I get less out of that as a technical endorsement versus an active approach, like let's say an ATAC with a Barrick. And that's a really good example because ATAC had a passive investment by Agnico several years ago. Moved their stock once, but after that really didn't do anything for them. And because ATAC has this Carlin sort of analog that they're trying to do, the technical endorsement for them can only come from somebody working in the Carlin. And that could only be Barrick and Newmont. And so when Barrick did give them that placement and the joint venture, that was a bigger deal for them than the passive placement.
Right. And Brent, I've heard you talk in the past months about that you hope that the theme for this year will be a return to science compared to last year, which you thought it was greed. Can you explain a little bit about what you mean by that?
Well, this is a global phenomenon, really, and it's the top non-scientist, non-data-driven guy in the world is Trump right now. And so that to me is very frustrating because you're not seeing people make rational decisions in terms of all the way down to the business level here at mining as well as global economic or political policy. So, and I think we are seeing that at least in the junior mining sector here, not in the U.S. for sure, but we're seeing the companies that are getting funded, it's splitting now. And quality companies, quality people, they can raise money. But companies that don't quite reach that hurdle or haven't got that far yet, it's difficult for them to get money. So we're starting to see the majors who are data-driven, science-driven, making these investment decisions. And I think that's pretty positive.
Right, that's great. And Joe, you recently published an article about how resource estimates are failing and mentioning the case of Pretium Resources. Can you explain what happened with the company? What's going on there?
Pretium, I mean, so in terms of resource estimation, I mean, you're trying to measure millions of tons of rock and estimate that with evidence that's like a core hole that's about the diameter of a bottle of Malbec, and you're basically measuring 1 in tens of millions part of the entire data set with these holes. And when the gold, especially let's say for the Pretium's sake in terms of gold, when it's highly variable, and if you use a term called coefficient of variation for like, it's extreme for Pretium, and 85 to 90% of the gold is in the top 5% of the grade, and after that it really doesn't work. And so the variability basically makes that a hard deposit to estimate, and so day to day they're going to have trouble in terms of what grade they get, and reconciliation will always be an issue for them. And it's not that they like to say that, oh, they did 30% better this quarter. The 30% better is not the issue. The fact that it's 30% off is the issue. It could be 30% higher, it could be 30% lower. You have no idea. And that's really the issue with something like Pretium. And I don't think that problem really will go away.
Well, we talked about it in the last letter, a couple letters ago. Joe did. We kind of compared it for simplicity to a loaf of raisin bread. You know there's raisins in there, but you don't really know exactly where they are, and that's their problem. You slice the raisin bread, you don't know how many raisins are going to be in there. So in theory, there's X amount of raisins in there, but how they measure those raisins is the question. And I'll take it a step further, in that, in my view, the way they've composited and spread the gold into their composites, what they've done is potentially assume the raisins are bigger than they are.
Yeah.
And that is what we have to watch for. And what that means is, instead of 15 grams, they may get 8 grams. That's how that's going to happen.
8 grams is really not going to make it there.
And we don't know that for sure, but that's kind of where it's starting to go. And it's not a stock we own, but it's certainly something very intriguing to watch how it plays out.
All right, and so for an investor, what should they look for? Like, what can they check when looking for flaws in a particular project? What should they pay attention to?
Oh wow, that's what we do. I mean, we know that almost every project is eventually going to fail. That's just the way it is. And that's gold's not worth 13, 15 ounces because it's easy to find. So what our job is, and I think investors or speculators in the sector do, is recognize when something looks like it's a discovery, and understand the size of the deposit. Is it going to be big? Is it small? Is this going to work? And right then make some assumptions as to what needs to happen in terms of drill results to verify your thesis. And eventually, 9 times out of 10, there'll be a fatal flaw that shows up, be it continuity, be it metallurgy. And if you can recognize that ahead of the crowd, you've made money all the way up to that point, and you're out before it does this. And that's, I would say, 2/3 of the money we make is on that.
All right. And last time we spoke, we talked about gold exploration companies. Are you interested in any other commodities in that space this year?
Besides gold?
Yep.
Oh no, we're definitely interested in copper. We've got zinc exposure, and we're looking. We'll look at. We've got lithium as well. So we'll do any commodity if it's a really good project in any commodity. Because really the exploration stage is, I think, an issue, we think an issue in all the commodities. And so we're sort of commodity agnostic in that sense if we talk about that early stage. So if somebody's onto something really good in whatever commodity, we'll be interested.
Right. So if you had to pick a stock in maybe the base metal sector, which one would it be and why? In
the base metal sector? Yep. I would pick Almadex. So we own that already, and so they've got a porphyry copper gold prospect called El Cobre in Veracruz State in Mexico, And that I went to site visit there, and it looks very interesting. There's a lot more drilling that needs to be done there, but they've got the ground. They've got a really good technical team there. So we like the asset, but also Newcrest has come in, like the asset, and they're willing to give them $20 million to advance it more. And now what we're seeing is that they've decided, okay, let's keep that asset in this company, and then we'll spin out everything else. And so we're seeing that happen right now in terms of a transaction right now with Almadex and generating a new spinco. So we like the idea of keeping this one as a copper prospect and then spinning out more prospect generation in a new microcap coming out. So that's one that we like.
Great. And finally, my last question for you, Brent. Are there any commodities that you are avoiding this year that you don't like?
Again, any commodity, if you can find a deposit, it's going to be production cost in the lower quartile is worth money. So in that sense, no, we're not avoiding anything. In a more general sense, uranium's not something we're very keen on. We would if we saw something really important, but I don't see the uranium price rising for quite some time. Graphite, we're not really involved in. That's really all that comes to mind.
All right. Thank you so much for joining us today.
Great. Thank
Thanks.
you.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me were Brent Cook and Joe Mazumdar of Exploration Insights.